What's up? Happy Monday. I hope you're doing super well. So, the Trump tariffs are in full effect. And what I want to talk today about is how this is going to affect the housing market and how you, as an agent, can take advantage of the situation. Every situation presents a massive opportunity. And I want to share with you what I think the opportunity is within this situation. And I'm going to give you a script at the end so you can go out and execute on this exact opportunity. First thing I want to do is get into the national data with you to kind of give you an update of where we are right this second. If you go to my trusty Redfin chart here that I love to go to and look at data all over the country, this is national stats. Of course, you can use this to dial into any local market, and that's exactly what you should be doing. But I kind of looked at a bunch of local markets, and a lot of them are really similar to this. So we're down pending deals right now 9.4%. So when we look at pending deals, we think, okay, that's future closed sales. Okay. So when you look at closed sales, we're up right this second. And you can see there's a little spike right there, actually, that's kind of abnormal to the last few years. And we're up 12.2%. And that's an indicator of what was going under contract 30, 60 days ago. Okay. And, I mean, the market was a lot different back then. When you dig into 2025, we're down pending sales. Now you do see it spiking up right here, which it does every year at this time of year. So it's not like, this isn't a fear driven. If you're here because you want to hear some fear driven information, you're not going to find it on this channel. Okay. If you're looking for fear to make yourself feel comfortable about not taking action and doing the things you need to do, then you probably want to unsubscribe right this second, because what I do on my channel is I show you data and show how we're in fantastic shape regardless of what's going on in the market. But you need to pay attention to the market so that you mean you're an expert, right? You need to be a professional. You need to be able to speak on these kind of things. So we don't look at market data to, out of fear that we might get wiped out or our business may go away. This is never going to happen. Closings happen every day forever, regardless of market conditions. We're good as far as that is concerned. But when we look at 9.4 drop in pending sales, we think, okay, that's a little concerning, right? Concerning on the fact of not that our business is going to go away, but just that we're down in a market that was already down. If we look at home sales, of course, we see this little spike, which is great, but that's kind of an indicator of what happened, a month or two ago. I'm really interested to see where this home sales line goes to over the next 30 to 60 days, knowing that we're down from last year, pending sales wise. When we look at median sales price, we're in great shape there, of course. We're up 5% year over year. When we look at active listings, we're up higher, which is a good thing. We want more listings. As a listing agent, you want more listings in the market so that you have a lot of listings, right? You want an inventory of listings. We don't want a market where everything sells in a day, right? We're getting into a balanced market, which is what we want. Days on the market going up. We want to see this. Okay, this gives us an opportunity to stack listings. Again, I'm going to show you glass half full. I'm not here to show you glass half empty and scare you into doing stuff. I'm here to actually help you build your business. Okay, so enough on national stats. That gives you kind of an idea of where we are nationally. You can get in here and look at this on a local level. You can get into your local MLS, which you should be watching every day anyway. But I want to dive over to the Trump tariffs and this article from The Real Deal. I'll put a link in the description straight to this article if you guys just want it. But this was the most comprehensive when it comes to what's going on, what the big home builders are thinking, because honestly, the big home builders are the ones that are going to see the most impact from these tariffs, because the tariffs were, from China, which is, whatever for home builders, but more so Canada is where we get a lot of lumber and oil, and Mexico is more so like steel and aluminum. And so, China, Canada and Mexico, and really Canada for that lumber. And, when you think about lumber, right, if the tariffs make lumber prices go up because we get most of it from Canada, it's also going to make the lumber that we get here domestically go up just because of supply and demand. It's like if somebody sells a house in a neighborhood for this much, well, all the other houses are going to sell for that much. Why would they sell for any cheaper? So even the lumber that's not directly affected by the tariffs will probably raise their prices as well. if in fact, prices go up because of the tariffs. So right here we get into Lennar's. I believe this is their president, John Jaffe. He addresses, the elephant in the room. He's asked about the impact of the new tariffs and immigration policies, right? As both of these can affect cost and cycle time. And cycle time is basically how long it takes to build a home. And back then, this was before he actually, the inauguration day, so he was still president elect when he was talking about these, tariffs and also the largest deportation program of criminals in the history of America. And I think it's important to note criminals because a lot of people think that everyone's going away. And if you notice who they've actually taken out and sent back to other countries have been the known, criminals of all sorts. And that's who they've been focused on getting out of the country. But it's real interesting to see what's going on here as you read later on in this article. But Jaffe, the president of Lennar, and CEO Stuart Miller, they kind of declined. They kind of bounced around the question because at that point it really wasn't quite clear on the impact of cycle times and cost. From an undocumented worker standpoint, if we have a huge deportation, and they're like, are there any clear answers at this point? Right? There are not. And they kind of punted around that question. We have labor we need, and we have materials we need. Okay, this is what President and CEO Paul Romanowski told analysts who asked whether tariffs would drive up costs. It is yet to play out to see what happens. Okay, in the weeks since the known rapidly taken shape, right? So he actually put these tariffs, which everybody thought that the tariffs were going to be like a negotiation tactic and he wasn't really going to do them. Well, he really did them. He slapped a 25% tariff on Mexico and China, and also a 10% on China. And I think in Canada it was also 10%. It was 25% on everything but energy. And I think energy was 10%. Don't quote me on any of that. Large cap home builders may have the wiggle room to defer projective questions. Okay. So they can kind of bounce around. But the thing is like when the earnings reports come out in the next couple months, right, we're going to see all this kind of play out. Right. And there's no telling what they're talking about behind closed doors. This is something everybody in the development and construction community is thinking about. Of course it is. Right. How do you underwrite uncertainty? It's a really challenging point to reckon with. And so on the ground, builders and contractors are sounding the alarm, right? Trump's policies, whether latent or signed, aren't only bad for business, they're already affecting it. So just the fact that he's talking about them is affecting how they're thinking, moves they're making, because these are huge companies, right? Building thousands of homes. So, Sam Charney development firm has been racing to insulate themselves from any potential price hikes, amending contracts so the firm will not pay the premium if costs rise. Okay, so they won't pay. They won't pay the premium. So what are they going to do? It's unclear if contractors are already baking those projections into bids. So the subcontractors and the contractors actually building the homes, okay, are they baking in those projections yet? But eventually they will. Brian Termel of the Association of General Contractors Trade Group said they're going to price in expectations for tariffs largely because their suppliers are pricing it in expectations. So if the suppliers are already pricing it in, then they got to price it in. It's already baked in. If the Trump tariffs go live this weekend, there'll be a little lag time. There will be little lag time before exporters pass the costs on to U.S. buyers. The impacts will be felt fairly quickly, with some surfacing in a span of weeks and the majority within a quarter or two. American builders, contractors, chief economist Agnirban Basu said. So, like, this is something that we couldn't feel the effects of really for a quarter or two, and I think that's really important to note. That the U.S. Buyers, right, and are they talking about buyers like the contractors who are buying supplies, or are they talking about the consumer actually buying the home right there? I think that's a really important question. I don't know which one they're talking about because they said exporters pass the cost on to U.S. buyers, and I I think what they're talking about are the buyers who are buying the materials, the builders, not necessarily the home buyers buying the homes. And so they're saying the impact will be felt fairly quickly, some surfacing in the span of weeks, and the majority within a quarter or two. That doesn't sound very quickly, right? In the near term, construction firms working under pre-tariff contracts will have to eat the difference. So if the construction firms put up, this, price and they went under contract and now the tariffs come in and now materials are higher and they didn't buy the materials, but yet, but after they sign the contract, then they're going to have to eat the difference. It's the contractors that we squeeze, right? The contractors. Specifically, the price of softwood lumber that's used in framing, roofing, flooring, and that of crude oil, which is refined into asphalt to pave driveways, parking lots, and roads, will rise. The U.S. imports the bulk of each of these from Canada. So from Canada, they're getting the soft lumber for the framing, the roofing, the flooring, right? And that of crude oil, which refined into asphalt to pave driveways, parking lots, and roads, right? That's all coming from Canada. A lot of that is coming from Canada. So this is going to hit home builders really hard. Diesel prices, and therefore the cost of shipping would also surge. Okay. Tariffs on Mexico, meanwhile, would raise the prices on trucks and tractor contractors, trucks and tractors that the contractors rely on. Okay. So we're getting the trucks and tractors from Mexico, right? And the cost of steel and aluminum may also climb. Okay. So the home builders who are building the homes, right, with Mexico and Canada, they got a lot going on there as far as the importings. Developers can source materials domestically or from countries that Trump does not target with tariffs. Okay, but there again, like that's a big unknown. Like, what are the other countries going to charge? Because they're not necessarily connected to the U.S., so they got to ship that over. What's that going to cost? Right. Amid a few specifics, Lennar Jaffe did highlight the firm's major shift starting 8 years ago to move away from Chinese and other Asian manufacturers. Okay, this is interesting. Today, the majority of what we purchase from our supply chain is from U.S. based manufacturers. He said nothing Lennar is using. Noting Lennar is using more domestically grown timber. So they're using more domestically grown timber. They're not importing that from other countries mostly. Okay. But if tariffs boost prices of imported goods, it's likely stateside suppliers will hike theirs as well. Okay. That's typically what supply and demand shows. So, like, the domestic wood that you buy to build homes, right? Even if you're buying domestically that doesn't have the tariff, right? If a lot of people are buying wood that has a tariff placed on it, now there's this new price of wood. Well, it's going to make all the wood go up because why would the people selling the wood sell for cheaper than what they could be selling it for? They're just going to make a bigger margin. Right. That's what's crazy about this is that it's going to affect everything. Okay. When we talk about labor loss and the deportation moves that are hitting the industry on the ground, as fears of ICE raids became reality, some construction workers stopped coming to work. So they're just like they're scared. So they're just like not even going to the job sites. Sources say highlighting a problem for an industry heavy dependent on immigrants. 30% of construction workers are foreign born, according to the National Immigration Forum, and as many as 23% are undocumented, according to a 2021 report from the Center of American Progress. So what was it? 30%, so close to a third, and 23% of those are undocumented. The drive to lay low and not show up for work, as Termel put it, is just the beginning. A week after Trump's Department of Homeland Security expanded the use of expedited removal, over 3,500 undocumented migrants have been arrested, according to the daily statistics published by ICE. How high that number climbs is anyone's guess, but those at risk include temporary hires on H-1B visas, those protected under the Deferred Action for Childhood Arrivals program, and the Temporary Protected Status, or TPS, recipients who flock to construction work above any other industry, according to the Immigration Research Initiative. Deportations will clearly hurt firms that hire undocumented immigrants first, but eventually the pain will spread. If the total supply of construction workers shrinks in this country, that will impact the ability for everyone who does construction to get enough people to do the work on their books. A smaller pool of workers means higher costs for labor, as material costs are expected to rise. So if you have fewer workers, so labor costs go up, and then you have material costs go up because of the tariffs, right? Then that overall is going to cause home prices to go up. And so I think what's one thing unclear is how are they going to the way I see this is just my opinion. I think they're going to get out the criminals, right? I don't think they're going to get out the good undocumented workers who are actually doing good and don't have a criminal background and are producing for our country. I don't see that happening. If you ask me, you can share your comments in the below in the comments about what you think the end result's going to be there. I think that's yet to be seen. And I think that once they get all the criminals out, then they're going to continue looking for criminals. And I think the undocumented workers that aren't criminals are just going to go back to work. I think that's what's going to happen there, if you ask me. Um, What's brewing then is a perfect storm, and even home builders shrug off any hint to cycle times, delays, are an intimate threat. So I believe that what they're saying is that the cycle times, the time it takes to actually build a house from start to finish, is gonna end up being delayed. Anything that drives construction costs higher will, on the margins, reduce construction volumes. If they squint, builders can find a silver lining in Trump's promises to deregulate and hack through red tape. The administration, for example, said it would streamline construction regulations and open federal land for residential development, a move that could slash the cost of building a new home by over $90,000, a Realtor.com and analyst found. But some see a regulation rollback as another threat to real estate. Reduced regulation oversights creates fertile ground for fraud. This is Christopher Ward of construction advisory firm K2. He wrote in Construction Dive, explaining that less oversight can lead to mismanagement, which can spiral into financial losses and reputational damage for companies involved. While deregulation under the new Trump administration may offer certain economic benefits, it also necessitates heightened vigilance. So that could be true. That could be not. Again, that's speculatory. It depends on what regulations he's rolling back, right? And I'm sure everyone would agree there's a lot of regulations that are over-regulated. There's a lot of things that are over-regulated, right? And I don't think he's talking about rolling back every single thing and just saying, hey guys, go out there and just build. Like down here in Gulf Shores, Orange Beach, you have to build by the hurricane standards, right? And like they have to come out and make sure before you put the sheetrock up that you've got the adequate amount of hurricane straps holding the roof to the structure, right? So that when that 200-mile-an-hour wind storm comes through here, we're not going to get a bunch of roofs all over the place on top of other people's houses and debris everywhere and a lot of people killed. And so, no, we're not going to see stuff like that, right? But I think what he's talking about are some of the minute, unneeded regulatory stuff that's costing a lot of money, time, energy, etc. But again, this is all speculative. We'll just have to wait and see what happens with the continued deportation efforts, what he actually does with tariffs. I mean, this could be a thing where, he's putting them into effect in order to negotiate. He's like, I'm going to put them in effect and then negotiate. Right? Because just talking with these countries that it hasn't done any good in terms of what his goals actually are. But this was one of the most comprehensive articles that I've seen, and the tariffs did go into effect, today. So what has that done to the 10-year treasury? Well, it's down. And the 10-year treasury is what we hold most valuable when we're looking at, the possible changes in mortgage rates. And we know over the weekend, we went into the weekend and it was 4.54, right? 4.54, and then it immediately dropped down to 4.51. And of course, going into the weekend, right before the end of the day, it dropped a little. It was actually up to 4.58, there at the peak before the day. Then it dropped. So it's actually 4.58 is really what we should be looking at. And it's much lower now, right? We opened up the day and we got as low as 4.46, which is not quite a point, No, no, no. It's actually more than a point from, not a point, a tenth of a point. It's actually more than a tenth of a point from the high Friday, but that was only for a split second. It's really kind of hovering around this 4.51 range, which is three tenths of a point, four tenths or so of a point, which is lower, right? So this is positively, depending on how you look at it, if you want the 10-year treasury to be up or down. For real estate agents, we want to see it come down because it's going to be directly related to mortgage rates. It's been a positive impact as far as what it could potentially do for mortgage rates as of today, right? We'll see what we'll have to wait and see what it does over the next week, over the next couple weeks, depending on kind of what happens. Mortgage rates, of course, they've been stuck at 7.05 for a while. I want to say they were that all week last night, maybe the week before. Um, and so they just haven't really been moved. They're hovering around this seven mark. Okay. Now let's look at the biggest opportunity, right? And the biggest opportunity is new construction because I believe these home builders are going to continue to kind of be worried. They have an oversupply compared to where they were. Things are selling slower. They've got a lot of spec homes. Inventory is up. And I think that we've got a window of opportunity here where things are going to be very, very interesting in terms of incentives from home builders for buyers with rate buy downs and closing costs and price reductions and appliances and all those things. I really believe that the next 3 months are one of the biggest opportunities for people to buy new construction. And I think you should use new construction as you're in to begin conversations to offer them the new construction to older property owners who own smaller, older homes, maybe same size, but they want something newer. They're tired of where they've been. They've been sitting on lower rates. Well, this is an opportunity for them to get close to what the rates that they have. But depending on where their rates are, they can take the equity that they had in their home and roll it into the new home tax free if they've lived there more than 2 years. As long as it's 250 gain for single, half a million gain for couples, you can roll that money tax free into your new home. You can buy the rate down. The builder will do that for you. Most of these builders are doing this for you. And so you've got to get in there and really find the builders and understand all the incentives that they're giving, right? And really stay in there with those agents who are working those subdivisions to know the changes as they happen. Because I guarantee you the incentives are going to change, who knows, every week or two based on what's happening, with the tariffs, etc. So in December, the construction spending, right? The construction spending beats expectations. Okay. So they were spending more money on construction, right, back in December. So like they've been ramping this thing up for a minute. And so that's what's really interesting is like it's been ramping up, ramping up, ramping up. The U.S. residential construction market to grow by 243 million between 2025 and 29. This is an industry that's going to continue driving, and this is happening because of rising household formation rates. Right, the amount of families that are being created are still on the rise. People are having less babies, but everybody talks about the end of the world and not being anybody there and stuff like that. You know how far out that is? Like when you talk about right now for the next 10 years, the next 20 years, there's a lot of growth that's going to happen. If you look at total households, if you look at this chart here, it's just on the rise, just a continual rise, right? Just continual rise. Inventory of new completed single family homes for sale spikes to highest level since 2007. Builders prop up sales with lower prices, bigger incentives, smaller houses. This is massive, guys. This is the opportunity. Back in 2008, the opportunity for me was foreclosures. I could go out and call property owners and say, "Hey, you want another house? You want another condo for half the price?" That was an easy sales pitch. And some of them bought, some of them didn't buy that, but I created great relationships and they bought and sold other things with me throughout my career, right? This is a moment that you can take and really ramp up your database and sell a lot of properties. Sale of new houses in 2024 were decent, while massive demand destruction crushed sales of existing homes because prices are too high. And if you look down in here, bring on the supply of new homes. Unsold inventory for of sale unsold inventory for sale of completed new single family homes has spiked about 50% from the peaks of 2018 and 19, and nearly 50% year over year to 224,000 homes in December, the highest since June of '09, according to the Census Bureau. Okay. And when you look at pending deals, again, I go back to pending deals. Buyers strike continues. Pending home sales drop again while inventories of new and existing homes balloon, especially in the South and the West. Prices are too high, is what they're saying. That's the problem in the housing market. But they've been dropping. But they've been dropping substantially in some cities, and that would be very few cities that prices are dropping in. But if you go down here to this chart, this kind of illustrates, this goes back to 2011. This is the pending home sales index, seasonally adjusted. And if you look at this blue line, that's the all-time low, which was coincidentally back in during the pandemic, during 2020. We had pending home sales drop 20%, literally like within like a week in the pandemic. So they dropped off dramatically, and then they popped back up to, some of the highest ever. And then it's kind of been, all right. Then it kind of started to drop off. You can see right there, the 2022, that's when mortgage rates started going up right there, right at the peak. And then it just kind of dropped dramatically throughout that year. And then it kind of leveled off, and it's just been kind of hovering around this area. And it actually touched down to a possible potential, almost to a new all-time low right there about midway through last year. So that's kind of where we are. But the great thing is that we're in this environment that is basically the worst we've seen in 30 years. But yeah, all of us are still sitting here in the business. And listen, if you're one of the 71% of agents that didn't sell a single home last year, that is fantastic that you just went through this market. I didn't sell anything 2006, 2007, right? '05, between '02 and '05, I made $1 million. But then I didn't sell anything between 6 and 7, zero homes. And really, February '05 to May of 2008. So really, it was 3 years I sold nothing. Absolutely nothing. But that was the best thing that ever happened to me, because I looked at the market. I understood how it worked and how it operated. I understood how cycles actually work. I understood that closings were still happening. And I realized that, wait a minute, I just have to talk to people and offer them whatever's happening at the time. Right? Whatever's happening at the time that I can offer them, whatever the best thing going is, especially when things are really down, right? When it's great, you just talk to anybody and like sales happen, and people want to do stuff and everything's awesome. That's the way the market has been. But when the market gets really low, it's like, okay, where is the exact opportunity I can use, and pinpoint that opportunity and use it to create conversations with people to see what it is they want to do in this environment. And that's what you've got to do. You've got to be a bulldog. You got to be a bird dog. You got to get out there and beat the streets and have conversations and find out exactly what people want to do and why in this environment. And the ones that want to do things, you close deals. The ones that don't, you create relationships. It's a win-win. You can't lose. And when the market rebounds, your business will literally 4, 5, 10x. And so, like, it's not a bad thing that you're going through this. You need to go through this to understand that there are times like this, and there are going to be times like this in the future. We're going to see this happen again. We're going to see this whole thing play out again later, 8 to 10 years down the road. We're going to recover here. It's going to go back up to 4.5 million sales, existing home sales. We're going to go back to 5 million. I think we're going to hit a new norm of 5.5 to 6 million home sales a year. The market is going to be roaring. It's going to be an amazing new norm, is what I believe we're going to see over the next decade. And then 8 to 10 years, 12 years, whenever the next cycle, happens, we're going to experience this again. But guess what? You're going to know how to handle it. You're going to know how to handle it. So where's the opportunity? New construction. And in my new 90-day action plan that you can download for free, it's a 44 deck, 44-page deck that you can download at zerotodiamond.com/90. If you go down to page 37, I want to say, let's see, 37 right here. I've got the new construction buyer script, right? And I lay out the entire game plan right here. Okay, you're going to identify new construction subdivisions and learn everything about them. You're going to find out all the incentives, etc. And then you're going to call people, property owners around that subdivision, or maybe not right next to it, but you're going to pinpoint subdivisions who you feel like will be a good chance that they might want to upgrade to the new one. It's like, I see you're in this house over here. Let me ask you, would you like a new home? Because I can get you in one for X interest rate and X closing costs taken care of and appliances and this, that, and the other. And by the way, you can use a lot of your equity, if not all of it, tax free to roll into this property and more than likely have the same or even lower mortgage payment, right? Depending on your situation, right? Let's go take a look at some homes if you're interested. If not, what is it that you do want to do? Are you interested in, investing? I've had a really great deal on a rental property. Would you be interested in that? You guys planning on staying here forever? Like, let me know what the deal is. And by the way, I'd love to stay in touch with you if you ever need anything. Is it okay? Great. What's a good email? Is this your cell number? Right? Bada bing, bada boom. Now you've created a friend forever and you didn't call them to try to sell their home. You called them to make them an offer they couldn't refuse, basically. And the offer is kind of the new construction home, but the more important offer is to be friends with a highly respected professional agent, which is you, right? To make friends with somebody who's on the inside of the market, right? If you scroll down and basically right here, I show you, I give you a discount on RedX to get the owners. I have a tutorial right here for you to watch about how I find the owners, and I actually call live prospects right there on that tutorial. And then down here is the script. Down here is the script. Hey, Mr. Johnson. Yeah, Mr. Johnson, this is Ricky Carruth from whatever brokerage in whatever area. How you doing today? Right? Great. Me too. I'm enjoying the day. Isn't it gorgeous? Cool. Well, look, I don't want to take it too much of your time today, but I see you got a house on whatever street or whatever subdivision. Let me ask you, would you like to be in a brand new home? I got a really nice one right down the road I'd love to show you. And then you just see what they say. You just see what they say, man. You just make friends with these people. I also have the trade out seller script. I've got all my other scripts here: expired, for sell by owner, sphere of influence, the voicemail script. I got all that stuff right here, plus the 90-day action plan itself. I lay it all out for you in these 44 pages for you to easily go out there. The handwritten letter strategy, setting your schedule, etc., etc., etc. All right. So I hope this video helped you. I hope it helped you get a different perspective on what's going on with the market and blocking out all the negative noise you hear from everywhere else so that you can not be so hard on yourself and actually go out there and build a business that you could be proud of. Not only now, let's close a lot of deals now, but let's build a massive business for the future so that our families can live out the dreams that we basically, in essence, promised them in so many words. All right. Keep crushing, keep selling, and we'll see you guys on the next video. Let's go.